I'm going to represent 2. This is your 2 move. See? So this blue represents the move of 2 from the low to the high. And it also represents the move from high to low on the downside. So here's your 2. And here's 4. Okay. Now, the way I want you to break up your 2s and 4s is I want you to think of them as divided into thirds. So a bottom third, a middle third, that's your second third on the way up, and a top third. Now we're talking about 2 now. So we're going to think of every uptrend as being divided by 3 parts, into 3 parts, equal parts. And this is going to become an important concept for knowing how to judge where you are in the 2. Is the 2 young? Is it an infant? Is it an adolescent? Or young adolescent to young adult? Is it a freaking old person? All right? Very mature. Okay? Now, the way you do this is with a question. You ask yourself, starting from this question. You start this question. Have I gone far enough? Have I gone far enough where it's obviously not the beginning? And if the answer is yes, then you got to do the next question. Okay? If I know it's not the beginning of 2, is the point I'm at the middle? And if the answer is obviously like, no, this can't be the middle means that I should double what's already happened. And if the answer is no to that, then you are in the top of 2. So let me give you an example of this. Okay? Let me give you an example. A stock has gone, boom, here's $20. Okay? And now we're at $50. Okay? Now, at 50, you're going to ask yourself, wait a minute, am I in the bottom third of stage 2 here? Obviously, the answer's no. And then you have to ask, well, am I likely, so is 50 likely to be the middle? So we're not in the bottom third. Is 50 likely to be in the middle? Well, you say, well, 20 to 50, that's 30. If I'm in the middle, this should go to 80. Right? You say, that's not freaking likely. Like, there's some subjectivity here. I'm not saying it's impossible, but the likelihood of this being not tired yet, the likelihood of a 30-point move and a stock that originated its 2 around 20, the likelihood that it's only halfway done is very small. So you are closer. You're closer to being near the top than you are near the bottom and near the middle. So now, knowing that It's probability here. It's subjective to a certain extent. But knowing that you're likely in the top third means that you should start paring down your position. Move up a little bit more, take some. Move up a little bit more, take some more. And this is how I teach my wealth traders to ease out of their play. We ease out in 3. So let me tell you this. We enter in the transitional phase. This is the transitional phase. Okay, we enter. Now this is the full stage 2, the blue. All right. We continue to add in the 1. So the original entry is the transition here, the transitional phase. Remember what the transition is, right? So boom, that's the transition. That's here. Now, anything above here starts the blue that we're looking at. Okay? So now the blue begins. Okay? Now, so, see what I'm saying? Now, we want to continue to add in the 1. You can add in the 1. Build up your position in the 1, in the lower third, that area close to the transition. You nail the transition, but we want to add, we want to build the position up in the 1. And then we want to ride the 2. You do nothing in 2. You ride it out. Sit back, relax. Let the wealth come. Once you have identified the fact that I can't be still in 1, this is certainly not halfway, because halfway would mean I should double what's already happened. That's not likely. Then you have determined that you're in 3, and now you should start paring your accumulated play down in parts. Now, I specifically teach my wealth traders how to do this, how to pare out of their positions, when and how, once we've identified that we are in the upper third of a move. And the same thing, guys, on the way down. So if I have identified a 3 and boom, nailed this transitional phase as my entry, my original entry, now the move down is the blue, right? 1/3, 1/3. I want to continue to find add moments. Boom, add, boom, add, boom, add, right? But now I want to stop adding in 2. I want to ride in 2. Once I've identified that I am likely to be in 3, we can't know for sure 100%, but we can be like 80% sure, 90% sure, whatever. Now I'm going to start pairing out, pair out, pair out, pair out, pair out, pair out. And if we get this right, what's next? Boom, boom, higher foot. And the game begins all over again. Over and over. Repeat, repeat for the rest of your life. Guys, I caught Microsoft here in 1994. I caught Apple here in 1997. I caught Amazon here in 2001. I caught gold in the form of GLD in early 2005. That was a tricky one because it was the beginning, but still. All right. And I began huge accumulation in Bitcoin on the transition in 2020. These were enormous wealth plays, and I still have all of them. Some decades. Now, what I will tell you is that every stock repeats the cycle. So every stock goes through that cycle, right? These are all cycles, cycle 1, cycle 2, cycle 3. So imagine my Apple play from 1997 having many, many cycles from 1997 till now. But I would play all of them right there, adding over the years to every transitional phase in Apple for decades. And once you get a power play like an Apple, an Amazon, a Microsoft, an Nvidia, a Bitcoin, you know, you can play every cycle. And what I teach my traders, we take profits in the upper portion of the cycle when we identify properly. We take that upper third. But what we take, we don't take it all. What we take, we put back in on the next round. What we take, we put back in on the next transition. What we take, we put back in on the next transition. And we just parlay and parlay and parlay in. I can't even tell you how many plays in Apple from 1997. And here's the cool thing, guys. I teach my traders to always leave 20% in their winners. So it goes like this. You're buying here. You're selling. Here's 100%. You're selling 80. Right? 80%. Repeat. You're buying here. 100%. You're selling here. 80% of this buy. Now, and you're always leaving, you're accumulating over time with that 20%. You're taking the 80% to taste, to live, to enjoy, to realize. But there's a growing, when you have the right thing, there's a growing 20%. That 20% that you leave in there accumulates over time. And it is this that will over time give you generational wealth. This is how I've held on to a Microsoft, an Apple, an Amazon, and now a Bitcoin, and many others. My wealth traders, I started this wealth program, traders, in 2009. 2009. Do you know why? In 2009, because the market experienced a collapse. That was the 2008 collapse. 2008, late 2008, boom, 2009, right there. You now know what March of 2009 was. I knew where I was in the overall market after the 2007, 2008 collapse. That was your 4. But this was not a rounded bottom. It was a V bottom. And it is in March of 2009 that I launched the wealth program. How crazy is that? Do you think that was by mistake? No. I launched it with perfect timing. And I got 500 wealth traders to join me. And I will tell you, traders, that from 2009 to 2021, we freaking rocked. Do you understand? I can show you plays. Nvidia at $9 went to 600. I can show you plays like Facebook at 18. You know where Facebook went from 18. Microsoft from 24. You know where Microsoft went from $24. And hundreds and hundreds and hundreds more playing based on this cycle concept the whole 12-year period. Now, the question is, where are we now? And why am I pounding the table on wealth now? Well, you should now know. I time these things based on what we know in terms of where we are in the cycle. So anyway, let's take a look at some stocks now, and then I'll bring this to a close. But I laid the academic groundwork for you. I put the cornerstones in place. And when it comes to wealth, the cornerstones are more important than anything, because everything's going to be built on top of them. Your entry, your stop, your profit-taking strategy, all of that is built on top of the cornerstones, this cornerstone that we put into place. Without this, none of that matters. All right? So, the third approach, as you know, is this. Boom, boom. You got to break your 2s and 4s into 3s, into 3 parts. All right? The middle part is your ride part. You do nothing. It's only the bottom and the tops that we act. We relax in the middle. Okay. Now, real examples, finally. All right? Here is, these charts were grabbed as of today, this morning. Now, we're looking at a daily chart, looks like here. We're looking at a daily chart of crude oil. Now, can you see, sorry about that, guys. Can you see the cycle? I keep flipping like that. Can you see the cycles? Take a look. Now, you should be able to identify what kind of bottom that is. How do we know this is the bottom? Because the next move created a higher foot. Where's my transitional phase? Right there. See? Bottom, higher foot, boom! Okay, here we go again. Here's drop. Why am I drawing so terribly today? Drop, failure to make a new high. That's warning number 1. Boom! Transitional phase C. Okay, V bottom. How do we know this is the bottom and not just another low? Higher foot. Boom!